And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge Show, the show where we bring you where the action is in the broader markets. Another bumpy ride ending on a relatively positive note this week. We're going to take a look at all that took place beneath the surface of these broader markets. But first, let's go ahead and take a look at some of that data that drove price action prior to today. And we did get news earlier in the week that the government was looking into possibly taking equity in particular semiconductor companies. That did cause a bit of uncertainty in that area and a general pullback. We also did see from July notes of the Federal Reserve meeting that they were concerned about inflation. That also brought those interest rate fears back to the forefront. So we did see the markets pull back earlier in the week. We also had key earnings reports last week: Walmart, Home Depot, and Lowe's. And net, generally not overly constructive, all about tariffs and other increased pricing that is expected. And then also we did get news today from Fed Chair Powell at his speech in Jackson Hole, and he did not in any way state that interest rates are going to be lowered in the meeting in a few weeks. However, he did imply that it was not off the table, and that was the cutting of interest rates was still a possibility, and that was good news for investors. It gave just enough boost. However, interesting areas of the market responded. So we're going to get into that as far as positively and negatively as we head into next week. We get key inflation data by way of that PCE report next week, and then also the all-important earnings report from Nvidia. We're also going to get GDP data next week as well. So let's go ahead and take a look at where we closed for the week with the S&P 500. And here we are, a daily price chart of the S&P 500, and you can see that general decline that took place this week. Volume is pretty considerable considering that we are in the ending period of the summer months, which usually we do see volume dry up, and we can see that we did undercut that 21-day simple moving average with the S&P 500. But take a look, today's 1.5% rally did a lot of good. You can see that we closed back above that 10-day simple moving average. We now have that RSI, which had remained positive throughout the week. And likewise with that moving average convergence divergence, I did report this with my midweek MEM Edge report, the fact that that uptrend did still stand in place despite a pullback in several areas among the broader markets. So from here, what we can do is go ahead and take a look at the Nasdaq composite, and we can see a little bit different of a view. We did dip into negative territory with that RSI. However, you can see that we were able to regain that 21-day simple moving average and dip just back above that 10-day simple moving average, similar to the S&P 500. And you can see that that Nasdaq RSI has reversed upward. So of note as well, we will get more into this as far as the Nasdaq and where technology stands, because of course we know that the Nasdaq is very tech heavy in its holdings. So let's go ahead and take a look. We again are looking at the S&P 500 large cap index. I'm going to add this EW equal weighted, and what that will do is negate, or those M7 names will not have as big of an impact. Each of the names will be equal weighted. And take a look, it was up almost 0.5% more than the S&P 500. In essence, we did see names outside of those M7 and some of those tech areas that came into play. So let's go ahead and take a look at those areas that did move the most on today's news. From here, we're looking at the 11 sectors in the S&P 500. It is a 2-month daily price chart view. I sort these ETFs by that relative strength in descending order, a 2-month daily price chart view, and take a look. Consumer discretionary up here at the forefront. It did gain 3% today into this nice base breakout. We're going to dig in, take a look at where the strength took place in that discretionary area. I found it very interesting. And then also we did see XLC. This is internet related stocks up here at the forefront, but more interesting potentially is the fact that we did get a very big move into energy. It was certainly the top performer for the week. This is XLE. We are going to drill down and see where the strength took place in that particular grouping. A lot having to do with the response to potentially lower interest rates and, in essence, a broadening out or strength in the economy that would increase oil prices, but also a drawdown in oil inventories. And that also is helping this group. We're going to take a look at a couple of names there. Let's take a look at XLF. This is another area that will fare well when interest rates are in a declining mode, all about consumer lending increasing and small cap banks. We'll take a look at a couple of names there as well. And then REIT stocks. This is an area that fares well in a declining rate environment, all about these REITs borrowing funds for new buildings and otherwise at a lower rate. We can see that it did push this RSI up into positive territory. Likewise with this MACD entering into positive territory and having that bullish black line up through the red. Now, from here, I do also want to share with you the fact that industrials had a pretty big day today, up 1.6%, pushing it out of this flat base. Some of the bigger movement there was all about trucking, and really a lot of down and out names moved up to the forefront, and we will take a look at those areas. From here, let's go ahead and take a look at technology, because you'll see that it did suffer going into today. And then today, the overall sector did underperform. We closed the week down about 1% for this tech group. Of note, as we move through today's show, you will see that technology did not have a robust bounce today, despite Powell's news relative to the potential cut in interest rates. So we will get into that. But from here, let's go ahead and take a look beyond these sectors. I use specific ETFs that are really quite powerful in defining where that strength is. So again, 2-month daily price chart view, RSI in descending order. First up, one of the top performing groups today was these banking stocks. Now, this is KRE ETF, and it is going to take into account those regional banks. We're going to take a look at a couple of those names. It's not all about these big money center banks, but rather these smaller names. And also from here, we can take a look at IWM, which is the Russell 2000. That for sure was the top performer, up 4% today. And a good part of that having to do with the move into these smaller bank names, but also small caps overall in a period of potentially declining interest rates, expanding economy. These smaller companies do tend to borrow a lot by way of looking to increase their business, and lower interest rates are certainly a good backdrop. Also up here, a major performer today was homebuilders XHB, up 5% on the day. And of course, lower interest rates are good for this industry group. We'll take a look at a couple of names here because we've seen mixed earnings, but the names are generally moving higher despite lower numbers. Also, as we move through, you want to be aware of these names in areas that are still exhibiting weakness. And in the technology sector, we're looking at the IGB sector software ETF, and you can see that we did have a nice bounce today, 1.4%, but that persistent weakness does remain. We still have a negative RSI and a negative MACD. This is something that I've addressed in my MEM Edge report as far as why the weakness, and it is well founded. So it's an area from my work that I would continue to underweight. IHI is the medical devices area in that healthcare space. We did see a nice base breakout and continuation rally, a couple of very interesting names in that area that are setting up really quite nicely. Let's take a look at semiconductors, and I'll share with you some insights here as well. You can see semis did, the RSI dip below that 50 this week, selling pressure continuing from last week, and we were able to recover that. Semiconductors did close back above the 10-day simple moving average. However, we did not see a lot of vibrancy in those larger former leadership names. This bounce here today was all about these smaller companies and very specific industry that we are going to take a look at as well. So let's go ahead from here and take a quick look at the underlying names in that Nasdaq 100. This is going to be those bigger names in the Nasdaq, quite simply sorting it by today's performance. And for me, I certainly want to get my arms around where that strength was today, and by and large, it was an awful lot of down and out stocks seeing buyers coming in. This is Zoom Video ZM up almost 13%, certainly very clearly reversing that downtrend on high volume, but you can see how it had sold off pretty dramatically. Next up is Align Technology. We can also see that this particular name gapped down in response to earnings. So a lot by way of bottom fishing taking place in the markets. However, we did see names such as Tesla advance 6% today, and the pullback was much more nominal than those other two names. But this is exemplary of that move into discretionary, because we did see auto stocks by and large really bounce today. Also, a little bit of news there we'll get into. I'll share with you some of those bigger names. And the fact that interest rates, if they decline, is certainly going to be good news for those that take loans out, of course, to get new vehicles. Again, more of that down and out. Price action here is Lululemon up almost 5% today. This decline took place on earnings, and you can see it's in the beginning stages of very close to reversing that downtrend. We can use this prior period as precedent, although it did falter upon earnings, and then other downtrend reversal periods as well for those that actively invest in that manner. Also, among discretionary stocks, we did see travel related areas. This is Marriott advancing 4.5% today, moving back above these moving averages with a now positive RSI. From here, we can take a look at a couple of other names in this discretionary area that look even more constructive. This is Hilton HLT, and you can see today's advance was adding on to a very bullish chart, quite simply because over the last week, it held in really well. And this is from my work, what I am going to focus on, those names that withstood the downward pressure elsewhere in the markets and then experienced this nice base breakout, nice volume, and then a nice advance on that MACD. And last up, we can take a look at one more name here that caught my eye, and that is PDD. And we can take a look at this particular company gapping up into this base breakout. And this is all about an advance in China's market. MCHI is the iShares China ETF, and you'll see that it too experienced a good day today. And this is all about money exiting bonds into the equity market. China has initiated a tax on income from these bonds, so investors are fleeing that, going into the equity market. So for those of you that like to invest potentially overseas, you may want to look in that area because analysts are pretty bullish about it. Another area of strength that I talked about last week that was coming into its own, but has continued, and that is TAN, which is the solar ETF. And you can see it was up about 5% this week. This is the chart from last week as far as that advanced, the RSI. We're looking at a weekly chart and looking at historical precedent. You want to be aware that there have been areas in the past where solar stocks do come into their own. They reverse their downtrend on the longer term, but do not have staying power. At this time, we are further along in this advance. So the reason I point that out is because ultimately, when we are looking, I'm going to go ahead and make this daily chart a little bit bigger to highlight the fact that ideally what you are on the lookout for that would demonstrate that the advance has legs is the fact that the 50-day simple moving average begins to trend upward. We've had that golden cross formation where the 10 and 21 day have gone back up above that 200 day. So in essence, we are on the lookout for this advance to continue. Nice high volume characteristics. I've moved over to a daily price chart, by the way, but it is exemplary. Let's see if I can go ahead and get that longer term weekly chart so that we can also take a look at what took shape back here upon that failed downtrend reversal relative to what's taking shape now. And what is taking place is that RSI is continuing to advance to a higher level. And then also you want to keep your eye on this MACD, which did turn positive. So it's looking really constructive as far as the possibility of this advance continuing higher. It also has a lot to do with the fact that we have initiation in place as far as solar energy, their tax benefits. And then most importantly is this week, the EAI put out a news item that they anticipate solar to produce almost twice as much by way of new energy this year. They're on track to fare really quite well. Let's take a look at some of the leadership names in this solar space. You'll see that this is First Solar, FSLR, had this gap up, pulled back to that 10-day. We did retain that upward trending RSI back above 50. Now, you will want to know among these solar names, they are, when they do get going, it can be really rewarding, but by and large, they do tend to be more volatile. I'm taking us back to this 2022 period, the end of 24, and so on. But again, of note that you are in an area that is faster moving. Not all of these companies have earnings, so they are going to be a bit more volatile. But here we are with Next Tractor and XT. You can see that we did have this gap up into a base breakout on Monday, pullback, and then buying on that pullback certainly rewarded you today. And then last up, we can take a look at another name that is on the move, and this is Sunrun, RUN. So I did want to make that note as far as the move into alternative energy. From here, I did talk about semiconductors and some of the names that fared better than others today. First up, we're going to take a look at Nvidia because, again, they are due to report their numbers next Wednesday. And you can see it had a nice 1.7% bounce, but we did not regain the recent high. We can also see we didn't have a lot taking shape here by way of that black line potentially up through the red, and we do have that RSI back into positive territory. So good news there. A couple of other big names we can take a look at because we did look at the semiconductor group earlier. And here we are with Broadcom, another former leadership name. Very nicely found support at that 50-day, but today's move, not overly encouraging. I would want to see it close back above that 10-day, get some nice high volume in there, and it could be all about waiting for those earnings to come in. Now, let's take a look at names that did bounce more today than others. And this is Silicon Labs, SLAB, up 7.5%. There's that high volume you want to see. We could see that MACD getting into positive territory and a nice constructive RSI. Another name on the move higher is TER, and it was up 5.5% as well, executing a nice 2-week base breakout, pretty decent volume. And I will tell you, the area that these companies, these semiconductor companies, focus on and provide products for is the auto industry. So you want to be aware of that, because I talked about some of these autos, certainly Tesla, but General Motors. Take a look. We are in the throes of a potential longer term base breakout here, taking us back to last December's high in price, all about continued advanced sales. And then also Ford, not quite as constructive, but we are seeing again a nice 3-month, possible, actually more of an 8-week, 2-month base breakout, possibly, but generally very constructive price action. Now, while talking about autos, I am going to pivot over to the consumer discretionary area, and that is where these autos are. We talked about Ford and GM. There is another area within the auto space, because in addition to new vehicles, numbers are being reported. The Wall Street Journal did a report earlier that came out earlier this week that sales of used vehicles is on the rise. So from here, I'm going to pivot into a view at some of these auto equipment manufacturers that really provide their goods to the used car marketplace. Here we are with ALV, nice base breakout after breaking out of this high tight flag formation and gaining on this black line up through the red. MACD bullish crossover with a positive RSI. A couple of other names in this very same industry with the auto parts suppliers. This is MGA, Magna International, and another name coming out of this flat base, gapping up over 4% today. Let's see if we can see a name that is not quite as advanced, an ADNT. Comes up because we are just exiting, coming out of this nice 1-week base. Not as advanced. We still have upside potential with that RSI and MACD. And then one last name in that auto space, auto products and parts, is Lear, LEA. And you can see we did have a very sharp advance, taking a look at this early July period as potential precedents. So when names do tend to have what I call liftoff, I will add that 5-day simple moving average. And you can see how it can act as an area of support, so that pullbacks to that 5-day can then in turn become your opportunity to add. So other areas in consumer discretionary, we talked about home builders. Let's take a look at a company that reported earnings this week. This is Hovnanian, and you can see they were down about 11% yesterday. It was all about the fact that the company missed earnings. So they did fall below that 21-day simple moving average with a negative RSI. But interestingly, the stock actually was up 11% today. So that implies that we were down quite a bit more yesterday. So in looking at this, when you see a company that has a sharp drop and it's well-founded, it's due to earnings or sales coming in below estimates. And the fact that it bounced today is quite telling. Let's go ahead and take a look at an intraday chart, and you'll see that it was all about movement into the open. A lot of buyers coming in and then stalling a bit, but still quite constructive. We could still be in for more upside with HOV. Another name that we can, a couple of other names we can take a look at here, Pulte Group, PHM. This is a daily price chart, and you can see that we are in the throes of a potential lengthy base breakout. There is a feature here on Stockcharts.com where you can go back in time and get that price action back here. We're going to be looking at the high in late November. It got up to 131. And at this point in time, we did close at 132. So we did execute that base breakout, and we are also seeing that nice high volume on the breakout. Another name that we can take a look at in the housing group is going to be MHO. And it is another name that certainly is on the move higher, but we can look back to this period in the beginning of this year where the stock did get up to a high of 142, and then today's move took the stock up to 147. So a nice base breakout in that particular name as well. Also looking at other areas of the market that did fare well, taking a look in particular at those industry groups that were up the most today. And there was not a lot by way of tech. Last up, I did talk about KRE and those banking stocks. So we're going to take a look at a couple of names there that are perking up. These are all going to be regional names that are well known in the industry. This is PNC Financial based out of Philadelphia. You can see this nice gap up into a base breakout, nice high volume, and then nice bullish MACD crossover taking shape there. The stock was up 4%, which of course for a banking stock is certainly notable. Another name up 4%, Regions Financial, and then also another name that executed a nice base breakout. Last up, Northern Trust out of Chicago, NTRS, not quite as vibrant. You can see the stock was up 2% relative to the other movers, up 4%, but also we did not see a good execution of that MACD bullish crossover, that black line up through the red. So certainly those other two names are a lot more interesting. And that is it for this week. For those of you that haven't already, go ahead and hit that like button if you like what you've seen, and use that link below to trial my twice weekly MEM Edge report for a nominal fee. Have a great weekend. I'll look for you here again next Friday.